in terms of creating a new discipline in the banking industry. Personally, I feel that it's a good stepping stone to the introduction of IndusInd. It brings about a discipline, and I think the Deputy Governor spoke about the need for such a discipline as well. So that's, I think, as far as the bank's performance is concerned. Can we bring about this thing? So we have finished year one of what we call planning cycles. This is planning cycle 4. We started from 1st of April last year, and we'll end of March 2020. So we are tracking well on what we had said we will achieve in the planning cycle, cycle 4. We show you how we measure up to that. Quarter 4 PAT growth came up at 27%, despite the fact that the industry as a whole suffered mark-to-market losses on the bonds portfolio that they held. Fortunately, we didn't have any losses, and therefore we've not had to amortize any of those losses as were allowed regulatorily. But of course, the gains came down. Therefore, trading income was down. But in spite of the fact that trading income was down 56%, we've shown a PAT growth of 27%. The interest margin remained stable. We are at 3.97. We raised our MCLR by 40 basis points during the quarter, which is a reflection of what's happening in the cost of deposits markets. Deposit prices have certainly moved up. Credit growth came up at 28%, and we did see a surge in the growth. And there are 3 elements to the credit growth. One, of course, is the solid surge we are seeing in the growth of our vehicle finance businesses. Vehicle finance, last quarter itself and the quarter before that also, we could see momentum coming in, and quarter 4 showed a solid momentum overall. So if you saw that disbursements, quarter-on-quarter disbursements on vehicle finance went up by 12%, and year-on-year they went up 47%. That's the entire portfolio. If you look at just MHCV, which is commercial vehicles, MHCV alone grew year-on-year by 67% and grew quarter-on-quarter by 27%. So you can see the surge in our vehicle finance industry, and overall the book grew by 24% year-on-year. That's one part of it. So that's what we call the vehicle finance retail portfolio. Then there is a non-vehicle retail portfolio, which also grew by 30%. And the growth was very secular when we also saw a surge in the growth of our corporate book, which also grew by almost 30%. So a 28% growth in our credit portfolio, and of course a robust growth also in the deposits. As you know, the industry grew by about 5-6% on deposits. We grew by 20%, so well above industry growth. Our gross NPAs were stable at 1.17%, and even after considering one-offs, some of the one-offs were caused by divergences, and we'll show you the detailing of the divergences as well. And of course, we have upfront taken the only what do you call it, troublesome account that we had in the diamond industry, which is well talked about. There are 2. We don't have one at all. The other one was a legacy account, which we have treated as a fraud. The rest of the industry is still working on it. It is standard with all banks, but we have taken it, classified it as a fraud, and we have provisioned as per RBI norms. So we've done that. That was the only account that we had there. So credit cost for the whole year comes at 62 basis points, which is flat, and the year before that was also 62 basis points. So it doesn't make any impact really on either our gross NPAs or our credit costs for the whole year. Other than this, the client base has grown up to 11 million. We grew by 6 lakh customers during the quarter. That's the new run rate. And our target of 20 million customers by March 2020 doesn't seem to be too aspirational. The earnings per share grew up to 63 rupees, 63 and a half rupees. Our cost to income ratio fell by 1%. So cost to income has actually also gone down. Other than that, we have on the digitization side, there's a lot of interest on what happened in digitization. We were the first bank to introduce WhatsApp banking. There has been some coverage of that and this thing. I don't know whether we can talk more about it. WhatsApp should be talking more about it, then we should be talking more about it. And I think the thing that we are really happy to see is that our mobile app was rated #1 by UBS, and it was #2 by Forrester. Forrester was last year. So I think these are the thing. Our branch network is going apace, so we are on target to achieve our figure of 2,000 that we had said for planning cycle 4 by March of 2020. So that's a brief sort of headliners on this thing. Yes, the other developments, of course, were that we got 2 approvals for acquisitions during this quarter. One was the Bharat Finance. We got an NOC from RBI. Before that, we had got approval from the Competition Commission, the CCI, this thing. We are now awaiting approval from SEBI, post which there will be the NCLT approval, and therefore we look to be on track to integrate this business in our business by mid of this year, or maybe around July of this year. So that is one approval. The other approval, which is also in the public domain, was on account of a company called ISSL, which is a subsidiary of ILFS, which is a market leader as a professional clearing member of the stock exchanges. It has a 20% market share of the professional clearing membership. A professional clearing member is like the broker of brokers, you know. So that also, I think we need only need now SEBI approval. There is no other approval needed, and that integration should also happen sooner than later. So these are 2 highlights in terms of approvals. I think that's the headline. I think a little bit because you all will delve into it. So let me show you this whole thing about the divergences as a thing. We have a slide on that. It's also uploaded on our site. Yeah. Okay. So the divergence number was 1,350 crores, and we have given, it's of course in the SEBI format results we've declared, we've shown that. This is an explanation of that.